Imagine that your biggest investment, the place that you fell in love with, has been losing value at a fast rate. Today, I'll talk about the 2008 financial collapse. I'm going into deeper detail about it. Pretty much the basic of it is going to be talking about the subprime mortgages and the predatory practices that these lenders were using. Wall Street obsession with making money and the lasting impact of the global economy. The crisis was fueled by the rapid expansion of risky lending. People that were making way below their means were given loans by these houses. Between '04 and '06, lenders gave loans to subprime borrowers. Poor credit history. Many of them were labeled as the adjustable rate mortgages. But the worst part was that the rates of these mortgages were doubling after 2 years, therefore making it impossible to make those payments, which later became outstanding. So, a great example of this would be a mortgage issue to borrowers with lower credit ratings. You've seen The Big Short. Well, it's a movie about how Wall Street fell behind and they forgot to realize that the mortgages that they were writing and packaging, selling it to other investors, were soon about to fall apart. At first, it sounds great if you're in the lending or the banking industry. But when you find out, sooner or later, you will lose your job. The whole economy collapse. These securities are basically like a bowl of fruit salad. You didn't know bowl of fruit salad, then they will have fruits that were bad. So it's hard to pick which ones were not going to make you sick. Just like the loans. Rating agencies gave these loans AAA ratings. On paper, they look good, but if you read through it, you understand that these were about to fail. These bursting bubbles led to lots of foreclosures in your local neighborhood. Soon, people find out that they were about to lose their homes. In the mid-2000s, a banking company called Lehman Brothers filed for bankruptcy because they were the ones running the global lending market. As soon as families were facing foreclosures, they were rushing to get those homes sold. But the worst part was that these home prices were falling. Not only that, but they were also unemployment rate going skyrocketing to numbers that nobody has seen in over 20 years. In the later testament from Ben Bernanke, he noted that small housing stocks triggered the massive global crisis. Something so small that runs your local housing market could also impact the major global. In conclusion, the low lending standards, the toxic debt that Wall Street created, was the perfect storm, and the transparency of complex outpaces the financial. The entire global economy collapsed. It's like a house built on the sand, and it cannot withstand the wind.